Being a chartered market technician, I like to blend different forms of technical analysis with my wave analysis, and the head and shoulders pattern was one of the first price patterns that I ever learned, and even to this day I like to trade them. Some people say that the head and shoulders pattern has a low success rate, however I disagree. The wave principle and this pattern go very well together, and I'm going to share with you a tip or two that I find helpful when determining which of these patterns are worth a trade. So in front of you is a 240-minute or a 4-hour chart of Euro Swiss, and we can see that the trend is down from 1.0938. So the head and shoulders pattern, when I learned it, it is a trend reversing pattern. There are people who use it as a trend continuation pattern. However, I always learned that the head and shoulders pattern, and I feel that it works best as a trend reversal pattern. So here we do have a defined downtrend, but we have price action started to trade up off the low of 1.0679. So at this juncture, it is worth considering that we do have a head and shoulders pattern, as we can put a neckline on this price action and then count a left shoulder, a head, and a right shoulder, and we can see the price action at this stage has violated the neckline. So this would be a trigger for the head and shoulders pattern. We could do our measured move and then see can price action continue even beyond it. So the measured move for the head and shoulders pattern is often just a minimum expectation. Now in front of you is the 4-hour chart for Euro Swiss from the Currency Pro services. And I just want to share with you the wave labeling and also what we are considering. So we are considering 5 waves to be down for an impulse red wave 1 and a wave 2 correction to be unfolding. But what's important here is that we're labeling the advance, the initial advance up from 1.0679 as a 3-wave move. So it's a zigzag, part of a double zigzag, but what is important is that it's in 3 waves. So it is a low probability scenario that the rally from 1.0679 is going to continue significantly higher. If we had 5 waves up from 1.0679, that then would give Euro Swiss more potential to move higher in a larger A wave as part of a zigzag unfolding for wave 2. But the fact that we only have a 3-wave advance, so if we go up to the 60-minute chart, a zigzag advance, that then is lowering the probability. So going back to the head and shoulders scenario, because we actually have a 3-wave advance, it is a lower probability that we're going to get the measured move objective or even beyond it, which we should also be expecting with the head and shoulders pattern. And if we go back to this 4-hour chart where I had established the neckline, we see that Euro Swiss did stage a bearish reversal and the downtrend is still intact. And this confirms that the head and shoulders pattern has failed. We've traded below the right shoulder and it looks like the downtrend is still very much intact. And now again, looking at the chart from the Currency Pro services, we see that we did get a double zigzag up from 1.0679 and favoring it has ended at 1.0764. So while there is room for a larger red wave 2 to unfold, what I wanted to highlight is that being aware of the Elliott wave count, and if, as we see in this case, we had a 3-wave rally as part of that right shoulder, it was lowering the probability of a successful head and shoulders pattern. A 5-wave advance would have been a nicer setup, as it would be an indication that the trend was turning up. So the 2 points to keep in mind to try and get a better success rate with this head and shoulders pattern: treat them as a trend reversal pattern, and also be aware of the Elliott wave count when considering the breakout. My name is Michael Madden. I hope you've enjoyed watching this video and I look forward to speaking to you again soon.